Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Propine is building a safe, regulated, and certified future for digital securities with the support and partnerships of reputed private, quasi-governmental and governmental organizations to create an ecosystem of trust, quality and compliance. Propine is positioned to become the first independent digital securities custodian in a highly regulated environment. With the Capital Market Services license in the Monetary Authority of Singapore's regulatory sandbox, Propine is leading the way towards a new world of possibilities for institutional investors. Besides custody, Propine provides end-to-end securities services including but not limited to entitlement checks, facilitating settlement, facilitating corporate actions, asset servicing, investor reporting, cap table management, statutory reconciliations and regulatory reporting. And now, please welcome Tuhina Singh, co-founder and CEO at Propine, a graduate from Singapore's unique Entrepreneur First Accelerator program.
We're talking about digital asset custody today, which is a crazy topic. It feels a bit like maybe the exchange world 4 or 5 years ago. So I think we've got lots to dissect and to explain. But before we do so, I always find it interesting. You have an institutional trading background, and quite a few of professionals like you who have at some point found the cryptocurrency and the digital asset space. So please tell us a bit about your background.
Sure. So I am actually a computer science graduate, and I always consider myself a coder first and a trader later. I used to love coding, and then I moved into finance literally by serendipity. I did my MBA, ended up doing an internship in City Treasury, and I realized, dude, I really love this stuff. And so that's how I decided I want to get into the treasury side of things, and I became a trader. Started my career with BNP Paribas as an FX options trader. And in my last role, I set up the derivatives trading desk for a bank for both fixed income and Forex. Pretty much traded a large breadth of different asset classes. And even during that time, I used to code quite a bit. So I've always been in touch with the coding side of me. So in 2014, I took a break to start my family. Because I was at home, I went back to coding and I was like, okay, so what's the new stuff out there? Because I used to code in C++, that was like eons ago. So I learned Python, I learned Ruby, JavaScript, coded a few things. And during that entire period of just, discovery, I stumbled upon the technical side of Bitcoin. So I had heard of Bitcoin before in 2011, and I had quite foolishly decided that it was a scam and took a notional short bet against it. And thankfully, it was just notional. Otherwise, I would be completely bankrupt. But in 2015, I began to discover it from a technical point of view, and I did a rudimentary coding of a blockchain explorer, a rudimentary wallet. And that's when I really realized the real power of it, the beauty of it. And I was like, no, this can definitely create a lot of change in the capital markets. And I decided that given my background where I can understand both sides of the equation, both finance and the tech, it makes a lot of sense for me to explore this part. And having seen the great financial crash and everything thereon, I was just a little like, I'd seen quite a few ugly pieces. And I was quite excited when I discovered this because it's like, okay, there's a lot of efficiency, a lot of transparency that can be brought by this technology. That's how my transition from traditional trading, finance, capital markets started into the FinTech space. And I didn't strike out completely on my own initially. I worked with quite a few startups in the space, got involved at the lower level. I actually started out as a senior software developer in one of the blockchain companies initially, been a part of an ICO scene as well, been part of trading scene, both from the buy and sell side for crypto. And pretty soon I realized that the whole idea of financial institutions joining the space would be a moot point without having a regulated and compliant infrastructure. So that's how the idea of setting up Propine was born. In fact, I never thought that I'd be setting this up on my own. I used to talk to a lot of people around me who were already in the space, and I was trying to sell them this idea that you absolutely need to set up, you need to apply for licenses, you need to get this thing done. And I was trying to see if there was anyone who would work with me on this. And at that time, in 2017, it was a laughable idea. I was in an absolute minority. Nobody wanted to get regulated, and they all thought it was completely antithetical to the core of what blockchain is. So that's when I realized that, dude, I think I'll need to do this on my own. And then I started working on this idea full time in the second half of 2017. and I applied to Entrepreneur First, an accelerator based out of Singapore. In January 2018, I had already formed a team with my co-founder. I found him as a part of that program. And we started working on this idea full time. So two things happened parallelly. One, we started working on this full time as an idea. And on the other side, I started working with MAS to discuss. For the first time, we approached them in Jan 2018, saying that we are looking for this license. And it was too early even for MAS then, because we were told, don't apply for the license. It's too early. So we waited for another 6 months before we initiated contact with them again. And since then, things moved really, really fast. That's been my journey from trading to Propine.
It's wonderful. Maybe also a small diversion, but I've only heard good things about Entrepreneur First. It seems to be a really, really good program. Also really hard to get into, I think. You need to go through a rigorous application process. But by now I know quite a few of the startups that came out of this.
I think I have benefited a lot from that program. There were a few key reasons I had joined it, and I have to say that all my reasons were well justified and well taken care of by that program. So I was seeking a good co-founder, a technical-minded co-founder. I found that person. They gave us a great platform to be able to present our ideas to the investors and hence help in our first round of funding. Raising funding alone in Asia isn't easy. It is in Silicon Valley. The odds are really stacked against entrepreneurs in most cases, especially when you're working on a deep tech space. From that perspective, I have to say that being in Singapore and having Entrepreneur First helped us a lot, because Singapore government itself has been very keenly trying to develop the deep tech infrastructure space, and they have provided a lot of support. That isn't the kind of support you would see typically in the rest of Asian, VC community. My experience has been that there are few types of trends, which VC community understands better than others, and hence it will be much easier to find money for those ideas, whether it is logistics, whether it is e-commerce, payments, retail side of loans. For example, if you're doing a FinTech, if it is payments or retail loans, etc., it kind of flies off the shelves. But anything deep tech where it isn't going to show revenue right away, and you have to be able to assess long-term risk reward, it kind of falls short there. Not to say they earned any, but it is difficult to find investors who have that depth of understanding or that depth of foresight to be able to invest in those type of business models. Having the backing of SG Innovate has been considerable help in those initial few years. Entrepreneur First, because of the way the program is designed and the rigor with which they mentor us during the process, having the right type of mentors to ask really tough questions along the way. For sure, I think they helped us move so fast forward in those 6 months that I don't think we would have done so if we were outside of the program, especially as first-time co-founders trying to see if the chemistry works along with the new idea. They provided certain contours which helped us move forward really, really fast. And they provide credibility in the process. So when we're speaking to investors, there's already a certain amount of okay, we know that these guys are not just faffing and they know what they're doing. So it definitely helped us considerably. They are also very unique in the sense that, at that stage when I was thinking and looking at a lot of different accelerators, I realized that unless you already have a team in place, and examples like Y Combinator, they would not just look at you having a team, but how long have you guys worked together? So probably we would give Y Combinator a shot 2 years into our journey rather than at the very beginning. So EF definitely makes possible what most other accelerators don't make possible. It's quite unique, and I've had a great experience with them.
Fantastic. And as you mentioned, it is a long journey. So you said 2018 and the second half you talked to the MAS again, and it still was about a year until you got into the sandbox. So what happened during that year? Many conversations.
Oh, wow. Yes, it was an intense year. Over 70,000 hours invested into getting that license, man hours. If I had to put together the number of documents that were created and exchanged, it was tremendous. But what was really interesting is that, we started out really early. So it was at a stage where some of the conversations with MAS revolved around some really basic concepts like, what is the place for digital assets themselves within the context of Securities and Futures Act? What does custody mean? What does possession mean? Or what does control mean? We've seen that definition change from being very wide to very narrow before we found a kind of a balance which made sense for the ecosystem. starting from that really basic conversations to understanding that SFA has been designed for an older era with very preset ideas of who the participants should be and what their roles and responsibilities should be, and hence that understanding of what risk comes with it. Within this new context now, those roles are changing, the processes are changing, the risks that lie within participants are changing. So it doesn't neatly fit into that category. We were quite fortunate because MAS asked us a lot of questions. They got really deep into every aspect, whether it was business, whether it was operations, legal, compliance aspects, documents, legal documents that we were creating. How are we going to work with them, work with our customers, with intermediaries, etc., right? At every step, the questions they asked were very insightful. They were questions that were not asked just for the sake of asking questions, but they helped us understand our stuff better. And as we answered them, our operations got stronger, our processes became much more mature, and the product itself underwent a large change from where we started to where we ended when we entered the sandbox. So we were, I think, a major beneficiary of those conversations, as much as having those discussions with MAS, which led us to understand that there are certain parts of this act that needs to change, certain legal changes would be required in future, because it's like putting a square thing into a round hole, right? So, but they were quite open with that. Not every regulator is that forthcoming to say, okay, we understand, but let's try and make this work because we need to learn as well from the private sector. So that openness is really important. That helped us get into that in the first place. I think they were the very first ones to allow a young startup to get into this kind of a space, which typically is considered a big boy space, right? Custody, what will a startup do? It always will be dominated by banks. Some of the naysays that I've heard consistently along the way and countered. So.
Excellent. And so that's maybe the first differentiation I want to draw. The simplest in order to sort out this digital asset custody space. So at the highest level, there are what I would describe technology service provider, and these are software companies. Then you have licensed businesses like yours who are regulated, and ultimately the service providers, and you might or might not use one of the technology providers in your infrastructure, but you are, as you said, it's a big boys, big girls type of business. It is a different quality than being a software vendor. There is a large number. In preparation for this call, I looked through a list. I found 112 digital asset service providers listed. It's gotten a bit crazy, like I said, maybe like exchanges 4 or 5 years ago, where that field has sorted out itself a little bit as well. It's still early stage in terms of this product line or this service. I think the listeners need to understand first that we're talking about the regulated side of the business. In the Singapore regulatory context, you have cryptocurrencies that fall under the PSA, and then you've got digital assets and you've got classic assets. And so across these three things, what does your license allow you to do?
So I'll start with the first part. You're absolutely right in defining how the ecosystem. There are technology service providers, plethora of different technology providers, where there are certain who only provide hardware solutions or software solutions, and there are others who have put everything together to create a custody solution, which they want to offer as a white label solution to different providers. So you have IBMs and Ledgers of the world as part of that place. And then you have custodians who are providing direct service to clients. That's definitely a very crowded space now in the past few years, but you have to, again, divide it into two parts. The first part are the ones that service crypto custody space, like crypto assets. That is actually an extremely crowded space. And then you have the other part, which is a regulated play to provide digital securities custody. Now, why am I making that distinction? Is because when you talk of crypto custody, the requirements are very different. The requirements are more around safekeeping of the physical key itself, like the actual digital key. Whereas when you're talking of digital securities custody, the aspect around safekeeping of the key is a very small part of the solution. The more important aspects come around how do you handle the corporate actions? How do you handle the entire life cycle? How do you do the reporting part of things? How do you handle the physical layer of securities, and how do you reconcile that with the digital securities? And even before that, how will the tokenization itself happen? the solution requirements are very different. And when you start looking at the solution, you start to realize that Propine stands quite separately from the likes of, say, BitGo or Coinbase or Closer Home. If you look at other really good names like OSL or Hex or OnChain, they are all really good crypto custodians in this area, but their solution offering is very distinct from Propine's solution offering. We're not competing with them in any way. If anything, I would say that there are complementary services that we provide to be able to cover the entire scope of digital assets ecosystem. So the license itself is a traditional license. There is no change in the legal infrastructure at all. And hence it's a CMS license to custody securities under the SFA Act. And MAS decided early on, if it is a security, irrespective of the technology with which it is provided, it will be administered under the SFA Act as a whole. When we got this license, we can handle the physical securities, we can handle digital securities, both of them. We can also manage fiat. So and now when we talk of fiat, there are actually three different components to it. There is an escrow aspect where you handle fiat for like short term, especially during the issuance stage, etc. Then there is a custody aspect, which is where you would provide the handling of digital securities along with fiat for trading initial times, whether it is for exchange or whether it is on behalf of investors. And the third aspect is handling fiat for the corporate action lifecycle management. So we can do all three different aspects, and they require different types of operations.
I wanted to continue from what you said around also the issuance. So rather than just being the custody solution, you also provide services on the issuance side when it comes to structuring the digital security as a smart contract and the features that it needs to include.
If you actually scan the market, you would realize that most of the solutions are either tokenization alone solutions, so tokenization as a platform play, or they are exchanges, or they are a combination of two. Most often they're trying to incorporate the first and the last part, which is this, right, and leaving the custody piece out. We were the only custody providers who had this combination of tokenization and custody. So exchange and trading is definitely a very important aspect of the entire deal life cycle, but I think it is still a little bit way ahead. At this stage, what do people really need, especially institutions? They need to be able to tokenize, and then they need to be able to safely hold. So this combination was extremely unique for Propine. More recently, of course, after BitGo acquired Harbor, we now have another player as a combination that can provide that sort of service together. We struck this entire solution from this middle piece where nobody was present. And we quickly realized that tokenization is a very important aspect to be able to start the process in the first place. There was a time when we were very actively seeking out partnerships and alliances with other tokenization players to be able to see if we could do it alongside others. In certain cases, it made sense. So we do have partnerships where we work with other issuance platforms, but we also realize that in certain cases, it kind of becomes prohibitively expensive. And so we already have that entire expertise in-house. So we decided that we will add it on as a service. But what is different is that we're not competing with issuance platforms for the service, because we do not provide that service on its own. We do not give it out as just a tokenization solution to anyone. Only the people who are going to work with us for custody get this service alongside. And it is more like, okay, because you're working with us here, so we also give this solution out as an addendum at a much lower cost.
So the primary driver is I want to custody, and if I haven't created the security yet, you happen to cover that as well.
When we talk of issuance, there are three different aspects to it. There is a legal aspect, so actually creating your documents. The second is the distribution, where you need to have the right type of licenses to be able to distribute that issuance. And the third is the rest of the issuer services, the technical services, so which include tokenization itself, then cap table management, so anything that a registrar agent and other such people do. The legal aspect, again, so we're not present there, but we have lawyers who can work with us in our ecosystem. The second part, again, which is distribution, we consciously took the decision that we do not want a license to do that, because it isn't about license. License is easy to get, another 3 months and you get that license. It's about cultivating the right type of investor relationships. And we wanted to instead leverage upon others who are already have these good, deep relationships already in place. So we are working with several distribution partners across geographies who can then work with the issuers that we work with and, distribute that. But the third part is where we are present. So we can do the tokenization, we can do cap table management, we can do issuance authentication service, we can help you in investor communications. It's only 1/3 of the entire journey that we cover in the issuance space.
In terms of the trading piece for the exchange, or whether it's an exchange or bulletin board type of thing, are you focusing both on the private and the public markets?
So I think public markets are actually very efficient at this stage compared to where the infrastructure and the technology itself are geared at this point of time. So under no circumstance can I think of at this stage we bringing any kind of efficiency into the public markets. So I think the low-hanging fruit is really private markets, where it's going to be as huge a change as we went from physical paper to DMAT in the public markets. I think that is the change that we think will be brought about in the private markets. And more importantly, because private markets are way bigger than public markets, way more complex with way many more products. The disruption of private markets is where we want to be. And I think there are two major aspects to this. The first aspect is what we've been always talking about, which is efficiencies in issuance, cost saving, blah, blah. There's a second aspect which really interests me, and that is about opening up the private markets from accredited institutional investors alone to the retail side of things. And it isn't a completely new idea, right? It isn't as if suddenly blockchain technologies come about and so we will suddenly do this. It's an idea that has been brewing for a very, very long time. Starting from the idea of crowdfunding, for example. Crowdfunding allows a retail investor to invest in standalone private equities. Now, the problem with that is, and here is where we are going to improve upon that idea going forward, is because crowdfunding allows retail investors to invest in standalone equities. There's no portfolio diversification. The amount of information that becomes available with these crowdfunding platforms is very limited compared to the high amount of due diligence that can be done by professional investors. So if you're allowing retail investors to participate in crowdfunding, if you're allowing them to participate in gambling sites, if you're allowing them to be able to do lottery, then you should definitely allow them to participate in private markets by helping them get that access through funds. That really improves their stakes. Today, these funds, they are not able to access retail markets because of legal reasons as well as operational reasons. So they will restrict themselves to a smaller number of investors with large ticket size, which totally works well for top-end funds who do not need to, they have money chasing after them, right? But there are tons of first-time startups or first-time funds or second-time funds or people who are doing these things where they can have access, they can provide this access to, for example, the burgeoning middle class in Southeast Asia. Now, these guys, as their money increases, their wealth increases, they won't just look for consumption opportunities, and consumption play based on that is a huge thing in Southeast Asia today. But there also is going to be new avenues they will want to invest in as well. So why do they need to be restricted to just ETFs and public equities or mutual funds, right? Allow them access to private markets, which have far outstripped the public markets in the last 10, 12 years. That would be a huge thing. And when people say democratization of private markets, this is what I think about. And need not be that every private investor will, invest in a separate token. No, I think that isn't a smart way. People do not have time, energy, or have that ability to be able to discern. But their ability to invest in good funds that are well regulated, handled by professional investors, that is what is going to be a key change. And I think it's a starting point, but we will work towards that end goal.
That's a great vision, because then the digital platform allows you a cost-efficient issuance of the smaller company equities, but then also to create the fund structure on top of that at a very low cost.
Yeah, and not only that, on the other side, there's a huge thing to be tapped into. If you look at the Asian bond market, for example, this Asian bond market, corporate bond market specifically, lots of problems with it. There have been tons of paper written for it and figured out how can we improve this corporate bond market. There are several problems. One big issue is that the type of investors in the space, there's literally one type of investor, and that investor is buy and hold. You might have one or two rounds before that. Ultimately, it lands in the hands of buy and hold investors, and that kind of kills the market. And because of this limited type of investors, the type of companies that can access this pool of capital is very, very limited. So the large swathes of corporates cannot even access the corporate bond market. The way to change this, the big catalyst, is to bring different types of investors into this market. And if we can get these type of funds, retail money into the corporate bond market and make it easy and more efficient for them to access this market will get a new lease of life and have a new set of corporates who will be able to access this pool of capital. So it is going to thrive both sides. You'll have different new issuers coming into the space and you'll have new investors coming into the space. Again, then that would reduce the reliance of this entire space on the banking world. And then that kind of itself creates a much more vibrant and much stronger, more diversified capital ecosystem.
So your objective ultimately would be to make the issuance of corporate bonds for small, medium enterprises more efficient than going to the bank, filling out 20 pages of loan application form, waiting for 3 weeks to get a decision, and then maybe get a decline at the end of it. So that's really the competition at the end of the day.
Yeah, I think that would be a great point to start with, because when you're selling to a newer set of investors, corporate bonds are way better than corporate equities, at that stage, because it's an income product. And secondly, it has much better contours to safeguard investor interests. And then that's the route that most small corporates would take, because not necessarily every one of them can provide an equity exit to the investors.
Coming back to the MAS sandbox, so what you describe is a whole ecosystem. You're a key part of that, but testing this out, you need to have interactions with other players. So how is working in the MAS sandbox? Is that confidential information? Who else is there with you to make this work and try out everything?
No, it's not confidential information. It's all available on MAS's website. You're absolutely right. We need to have other parties to work with. And to a certain extent, the fact that, not everything moves in that ideal lockstep. And that sort of does hamstring efforts of how the ecosystem will come together. In our case, when we entered the sandbox, we did not have very many players to work with. And hence we had to also do the tokenization ourselves and everything. And we fortunately found some good issuers to work with. And we started off with that. But now as we are towards the exit, we've got new entrants into the sandbox, exchanges. So that's a very important class of potential partners that we need to work with. And as we speak, we are currently integrating our solution with them. And within the next few months, we will be going live with some of these services. So that would show how we're working with independent issuers. We will be able to showcase how we're working with exchanges. We'll be able to showcase how we're going to work with broker-dealers separately. So 3 different types of ecosystem players over the next few months. But we also have in pipeline other types of partners where tokenization as well as trading, secondary trading will be done by them. So that would be a 4th class of type of partner we work with. But we have pretty much every kind that we can potentially work with are there in the pipeline, including a bank. But of course, banks move at their own pace. So we'll see when that project comes to life.
And from the technology perspective, there are quite a number of protocols out there that allow you to create digital assets. Which ones are you supporting?
Actually, from a philosophy perspective, we want to stay tech agnostic or blockchain agnostic, because there is going to be no single blockchain per se that is going to win out in the end. And it's still early days for that technology. For now, we already support Ethereum, we support Corda, and we will be launching our support for Symbol. I think recently we had done a press release about that as well. Symbol's mainnet is going to be launched in December, and we'll be launching with them. So very excited about that. Apart from that, actually, there are a few others in the pipeline, but there is one that you would hear about sooner than the other later. So Q1, we will be making further announcement of yet another integration. We will continue to do that, yes.
So from an industry perspective, since you mentioned real estate also, do you see that industry as a primary target in Asia, given that so much wealth is tied up in real estate? Or from the demand perspective, you see other industries moving faster, others slower? Where do you see the focus at the moment?
I'm going to give an answer, but I'm not an expert in real estate space. So there is a lot for me to learn there. But based on what I have seen anecdotally, there's obviously a lot of excitement in that space, because it just seems to lend itself extremely well to the idea of fractionalization, being able to get faster exit, so more liquidity, At an ideal level, it just seems so perfect for tokenization as an asset class. That's why there is a lot of interest. There are umpteen number of projects working in the real estate space. And we can also support real estate projects. And we've seen quite a few at an idea stage. But practically speaking, there are still a lot of problems that remain unresolved. One of the key issues with real estate is that it is one of those assets that require maintenance. And if you require maintenance, then the question about who will maintain it. If every participant has a very small share, then their incentive to participate in governance and maintenance is extremely low. So those are some of the questions people are still trying to answer. I have seen some of the tokenized real estate projects being sold to investors, and I've heard some really valid concerns. And one of the important things is that people who've been playing in the real estate so far are people who are so well entrenched in it that they see no value. So I think that market of investors needs to develop further. And that will only happen as we develop stronger legal structures around the space. Understand why, for example, what is the problem with REITs? Why is REITs not selling? Why should I not go for REITs and go for tokenized real estate? Some of those questions are still not well answered. I do think there is a huge potential in the space, but there are still questions that need to be answered, and they aren't very easy or tractable answers to give. There are lots of very smart minds working on this issue. I think it's going to get resolved and it will become a large part of tokenized asset space.
Yeah, it's a valid question, right? I have it always when people say we're going to tokenize gold, and maybe I'm privileged given that we have access to developed capital markets, but it's like, why would you tokenize gold? I can buy a gold ETF at a fraction of cents transaction cost, right? I don't need to do that on a blockchain or so. And similar what you're saying about real estate, those who are entrenched in this market, they know how the processes work and might not be 100% efficient, but it's also works pretty well.
It does. So the point is you don't start from point zero, but start from what is the issue with REITs first. And then let's start resolving there. I think that would be some of the key concerns. And then resolving the legal, structural, and governance aspects of it. Tokenization isn't a play for tomorrow, as a lot of people seem to think. I think a lot of people are going to miss the bus in a big way. It's here and now. And that's actually one of the big reasons why Ian, our marketing head, he has started doing these interviews with people who've been there, done that, to be able to explain to people, to bring it to light that it isn't something that's going to happen in the future. It's actually happening today. And these are some of the really examples of what's happened, what problems they faced, what solutions they brought about, and how it is helping them. To a certain extent, of course, it's still early stages, but I think it's moving at a lightning speed. So anyone who thinks it's going to happen at some stage in future, they're going to, before they know, they'll be in the laggard space.
And your projection into 2021 is you're getting out of the sandbox soon and will be then fully operational?
Yes, so we're exiting on January 7th. So that's around the corner. So the license is still full, right? But there are certain contours, certain things that we can't do, certain limitations of your operations within the sandbox. Those limitations will fall away.
That is very soon. So you have got a full runway for 2021 to build out the business.
Absolutely. And that's going to be the sole focus for 2021. Quite excited. There are quite a few things planned out. So
you have issuance lined up that goes into custody then on January 8th?
We're looking at a date between January 11th to 1st of February. But yes, absolutely.
Wow, so there will be activity. Great.
Yes. We should start doing some marketing around that in December. A few weeks down the line, we're looking to complete our end-to-end testing for that before we start making marketing splash around it.
Is there anybody else whom you would see as competition regionally?
HSBC. See, banks and other similar large financial institutions would be our most formidable competitors in medium to long term. We choose not to look at them as competitors, but as much as partners. And there are different ways in which Propine can work with them. There are tier 1 banks, which would ideally like to do everything in-house. They have considerable resources. They have considerable technological teams within themselves to be able to build that out. So when tier one banks like HSBC make these kind of moves like Olam Bank, or before that when they had privatized, when they had tokenized private paper, these are extremely strong signals to the market. And when you work with a tier one bank, you pretty much get locked in as a startup into one of the banks. So either your way forward is to work with one of the banks and then get bought out by them eventually, or you're going to work with a multitude of tier two, tier three banks where you become their choice provider over long term. And we're looking at all the strategies early in the game yet, but I'm sure over the next few years, the space is going to, as it matures, there's going to be consolidation. And there's no doubt that custody as a play overall is something that requires a heavy balance sheet to be able to make a large dent in the market, in the capital market. So we definitely will be looking forward to working with a larger player with us. But at that stage, it will be a question of what they bring to the table and what we bring to the table. And depending, like we have different types of strengths. So there are multitude of different types of players that can potentially form really good and very strong partnerships with us. And we're talking to quite a few to see what happens in future.
Yeah, and ultimately, if you want to provide margining services or you want to take collateral on OTC trades or so, you need that balance sheet behind you.
Exactly. But those are the services that a custodian can best provide. So these are all services for future as we build our AUCs.
Wonderful. Excellent. Thank you very much, Tuhina. It was great to get a bit more broader view as to what you're doing and the vision, and best of luck for the next year. Looking forward to the start.
Thank you so much, Norbert. It was wonderful speaking with you. Thank you.